If you are a struggling trader, then in most cases, there are only two main reasons why you are losing money. You have a low win rate or a poor risk to reward ratio. Or worse still, you have both a low win rate and a poor risk to reward ratio. But hey, don't lose hope because the problem isn't that difficult to solve. In this video, I want to introduce you to a tool that will massively improve your win rate and risk to reward. Towards the end of this video, I will also debunk a myth that you should always select the most profitable trading strategy. Sounds like a bold claim, I know, but you will understand why this is so powerful in a moment's time. This tool is grounded in statistics, which means that you won't be guessing what you should be doing. Don't worry, it's not going to be something super complicated. You don't need a math degree to understand it, and even a 12-year-old kid will be able to understand it. No more guessing if you should be using a fixed risk to reward of 1:2, 1:3 or 1:4. The data from the tool will precisely show you how you should tweak your strategy to get the most out of it in the long run. Not short term, but long term. Often, traders make short-term decisions that seem profitable in the short run, but are actually detrimental in the long run. So this tool will help you make the right decisions for the long haul. Now, if you want to be a profitable trader, you have to be thinking about your next 100 trades and not be fixated on the next 5 or even 10 trades. Because in the short term, your trading result is random. As you can see here, even with a 65% win rate, the probability of losing 5 times in a row is still quite high at 21.5%. Suppose that you flip a coin and it lands heads twice in a row. Would you then conclude that this coin will always be heads? Of course not. Yet, this is how most traders approach trading, making tweaks to their strategy based on a couple of trades. Anyhow, this tool or concept that I want to introduce to you is known as the maximum favorable excursion. Now, before I explain to you what it is and how to calculate it and implement it, please do me a small favor and hit that thumbs up button. It helps support the channel and I would really appreciate it. If you are new to the channel, do hit that subscribe button as well because new videos are being uploaded every single week. And I do believe that all these videos will shorten your learning curve when it comes to trading. My team also runs a free Telegram channel where we send out our signals in real time. It's totally free, and if you have not yet joined us, you can join us via the link in the description down below. So let's start by explaining what the maximum favorable excursion is. It sounds complicated, but it isn't. In a nutshell, maximum favorable excursion is the peak profit that a trade earns before the trade is closed out. This is important because it tells us how much money we are potentially leaving on the table. And if we know this, then we will know how to tweak our strategy so that we can capture more of the profits. Now it's way easier for me to show you what it is, so I will pull out a chart right here and illustrate the concept to you. Suppose we took a trade right here, and as per our own trading strategy rules, let's say that I typically exit when the risk to reward is 1:1.5. In this case, we can see that price continues to move in my direction and I left quite some money on the table. The maximum favorable excursion is simply the maximum amount of money I could have potentially made on this trade. Granted, I won't know beforehand that this trade would carry on trending in my direction. But still, this is good data that we want to collect so that we can make certain tweaks to our trading strategy. In this scenario, we can see that the maximum favorable excursion is 2.6 in terms of risk to reward. We want to record this into an Excel spreadsheet. We have the entry, the stop loss, and the maximum favorable excursion. If you want to be a little more diligent and find out the best risk to reward for your trading strategy, then you could also include additional columns like this and tabulate the results. If price doesn't hit the target take profit, we record it as -1. This is just one trade and it's pretty common sense that it doesn't tell you much and the data is unreliable. So we repeat this process for the next 20 or even 30 trades. The more, the better. Just be mindful that you have to be using the same strategy and not jumping from strategy to strategy. If you do that, this won't work because your data is not generated in a consistent manner. You could use a backtesting software like tradingview.com if you don't wish to test it live and wait a long time to get the data in. Let me run through a couple of examples more to solidify your understanding of the maximum favorable excursion. Right here, suppose you went short here. In this case, your maximum favorable excursion will be 4.8 and you will record it as 4.8 in the Excel spreadsheet. Right here, let's suppose you took the breakout of the swing high. Price goes in your direction and this is your maximum favorable excursion. You record it in terms of risk to reward and in this case it is 1.13. Again, we return to the Excel spreadsheet and record it accordingly. So I have explained to you what the maximum favorable excursion is and how you can calculate it and collate it. Right now, this is where the rubber meets the road. I want to show you how to use the data to optimize your trading strategy. Over here, I have some data to illustrate to you how to use it. Obviously, this ain't actual data, but let's just assume that it is for the sake of this illustration. Now, interpreting the data is simple. The first thing you want to do is to take an average of the maximum favorable excursion. In this case, it shows 4.85. This means that on average, a trade moves 4.8 times in terms of risk to reward. So suppose that you are currently using a risk to reward ratio of 1:1.5, then you are actually not maximizing your profits and leaving money on the table. Thus, using this data, you can be confident that you are better off using a risk to reward of 1:4 in the long run. The other thing you can do is to sum up the total returns based on different risk to reward ratios. At a glance, you can tell which is the best risk to reward that you should be using. In this case, you can see that using a risk to reward of 1:4 yields the highest returns. As a general rule of thumb, the higher the risk to reward, the lower the win rate. And while it's perfectly fine to choose the risk to reward that yields the highest returns, you have to be mindful about your trading psychology. In this particular example, you can see that the win rate for a risk to reward of 1:4 is slightly lower. You are looking at winning only 56% of the time. Now, not many people are comfortable trading a strategy that is like a coin flip. They might abandon the strategy just after getting a couple of losing trades. Because remember, the lower the win rate, the more likely you are to go through a series of consecutive losses. It's simple math. For this reason, it might not always be ideal for you to select the risk to reward that yields the best results. If you can't stick to it, then you are going to mess it up and end up losing money. You might be better off selecting a risk to reward which has a decent win rate that you are comfortable with. Again, this varies from person to person, but I think it's imperative to point out the importance of psychology. Be mindful about the win rate when deciding what kind of risk to reward works best for your strategy. Summing up this video, I went through what the maximum favorable excursion means. In a nutshell, it's the maximum amount you could have made in a trade, assuming you had some crystal ball that told you exactly where price would reverse. I also explained the importance of compiling 20 or 30 trades so that you can use the data to tweak your existing trading strategy. Lastly, I explained the importance of psychology in selecting the right risk to reward for your strategy. And that's all I have for you in this video. I hope you got a ton of value. Now, if you are a new trader and don't yet have a trading strategy, this video doesn't address this. So if that's what you need, then I recommend that you check out the following trading strategy video right here in the end screen. Don't forget to subscribe and I'll catch you in the next video.